Hey everyone, welcome to the KE Report in a daily editorial on Monday, November 24th, chatting with TG Watkins. TG is the director of stocks at Simpler Trading, also editor of the Profit Pilot website. Now, TG, we're going to be talking markets, we're going to be talking crypto, and wherever else you could be seeing some opportunities in your trading strategy. So I want to start with markets because it's been a couple weeks now where it seems like headlines have been dominated by people worried about some sort of AI bubble in those high flying tech stocks, the ones that account for just so much of at least the S&P, some of the broad averages. Now, we had Nvidia's earnings last week, and they were strong in pretty much every way, and their guidance was even increased. But any sort of share price reaction was short lived as Nvidia had a good day after their earnings were released, but pretty quickly gave that all back. And quite frankly, we've just noticed a big shift in sentiment for the markets. After a very good year, people seem to be a lot more worried heading into the end of this year. What are you seeing, TG?
Yeah, I think that's all pretty much right. I think that maybe the AI thing got a little bit over its skis, and the big players, investors, are kind of worried about the numbers and how they're doing, which I don't know. I also hear some people being like, "Are you crazy? Of course, we're never going backwards. We're going forward. This is going to be the future and all that kind of stuff." And that all might be true. But I think they're saying, "Okay, well, maybe we're not going to make as much money in the time that we wanted. Maybe it's going to take longer." And if that's the case, then they have to reprice these stocks. And also, we had a really, really big move since April with the tariff tantrum lows. And so a lot of these things were just very extended, even from a technical standpoint, as far as the stocks go. And then, I think kind of one thing happened, and then we triggered, maybe because the Fed was kind of saying, hey, a December rate cut is not a done deal. And so then that kind of put some cold water and stuff. And so the market suddenly had to start repricing everything. Even though we got some good news from NVIDIA, which bounced the market on Thursday, I'm also kind of thinking that the market just wasn't done going down yet. So the market took that bounce as an opportunity to just short into it because that Thursday and then Friday, the SPX pulled back exactly to the weekly 21. I mean, I was targeting 6,500 and it hit 6,525. So I'm calling that close enough because I was looking at the weekly 21. So I don't know, maybe from just a mechanical standpoint, the market just needed to get lower and it took that opportunity to do it. And then the other thing is that I think what also is kind of helping to boost the market right now is that the likelihood of an interest rate cut for December went from 35% on Thursday to 75% on Friday. And of course, the market always loves rate cuts. And so that's kind of where I think we're getting some strength.
That's an interesting point, TG, about the Fed and I guess, higher expectation now of a Fed rate cut. This whole year has been that theme underneath the surface about will they, won't they, and how many cuts will we get, and to what degree. That's really important for certain sectors, especially the small caps. And I know you swim in that universe of stocks, and they're more capital dependent. So the cost of capital, obviously, the lower the rates, the better for small caps. Any trends or any stocks there that you see reacting to that news more so than others?
Not totally yet. The small caps and those kind of things have just been getting hit for the last few weeks. And so the only thing I've been telling my subscribers is that I think that this was getting a little bit extreme to the downside. And I said for basically all of last week, I said I think we're close to a bottom because I'm looking around the market, I'm looking at these individual names, and I'm like, I don't know how much further they can go down because they're number one, getting into support. Number two, they're just super extended. We have had no bounce for the few weeks that they've been going down. And three, they're getting really far outside of some of these parameters that I look for and say, the risk to reward on the downside is no longer there. And in fact, big players should be looking at this and saying, these might actually be attractive prices to start coming in and just buying the dip. And that's why when we finally had a little bit of news change about the interest rates on Friday, plus the SPX hitting the weekly 21, I started getting into a few trades on Friday, and obviously the market's up today, so that worked out nicely.
Any thoughts on just this time of the year after it has been such a good year outside of that whole Liberation Day sell-off, which turned out to be such a great buying opportunity? Any chance this is just some natural profit taking by the end of the year here, TG?
Let's see, profit taken by the end of the year. I'm not so sure about that. I do know that some of the long only funds have to do some rebalancing in October, so I think there was maybe something we could blame on that towards the end of there. And the statistics said that November's supposed to be strong and we're supposed to have a strong into the end of the year. I mean, everybody's waiting for the end of year rally. And then surprise, it didn't happen for the last few weeks. So I don't know so much about that. I do think that this kind of comes down to the market having to reprice interest rate possibilities and then probably just the whole AI thing. I think the nervousness finally caught up to investors and everybody kind of puckered up. And then you also look at Bitcoin and the whole October 10th thing, I think everyone keeps talking about because you look at Bitcoin and leading up to October 10th, Bitcoin started actually breaking out. And I just know everybody was looking for Bitcoin to go higher and break out and all that kind of stuff. And I am sure a bunch of people out there just loaded the boat going on that breakout. And then October 10th happened, totally reversed. I'm sure a bunch of people got liquidated. In fact, I mean, there's statistics saying it was some of the biggest liquidations that never happened. And then it came down, and then I think, energy and momentum just kept going down, and the bid just fell apart. Nobody was wanting to buy, and all the big players like, yeah, I'm not going to buy, and they just let it keep going. And it could be leverage that was happening. People kept getting stopped out and liquidated, and Tom Lee was talking about some glitches or whatever, and could be one thing triggers another thing, and that kind of had an escalating effect. And then people just step away when these things come down hard like this. They're like, I'm just not going to be in. And now you can see that Bitcoin and MSTR and Ethereum and BMNR and stuff like that have just really waterfall down. And now I do think that they are starting to become at support and potentially at attractive prices where I think big players are actually going to start buying in here because, I mean, we just had a huge move to the downside. I think it's on sale. You don't want to catch a falling knife, but I think we're getting pretty close to where these valuations are looking pretty attractive, at least to just start putting some money into it.
Well, let's dig in a little further on the cryptoverse because it's been definitely a story over the last, let's say, month and a half that's really caught in a lot of people's attention, even people that don't follow the sector that closely. And you brought up MicroStrategies there, MSTR. That's a stock that's kind of a Bitcoin repository. You've got Michael Saylor, who people call the Bitcoin Jesus at the helm, and he's a big proponent of the sector. But when you look at a chart of MSTR, a waterfall decline almost doesn't even summarize it. It's way below its moving averages. It's really gotten beat up. It was a $450 stock that's now down below 200 at 176 as we record this. What do you do with a stock like that, TG?
Well, a couple things. If you are an active trader, you have stops and you get stopped out. No need to ride these things down. If you're a long-term holder and you don't want to get out, then either you try to hedge on the way down or you just have to be along for the ride. I think that it is prudent to have some sort of exit strategy. I know a lot of people keep thinking that either MSTR or Bitcoin are like really long-term plays, and that's great, but you look at what can happen. I mean, you can lose half of your value in short order. And so you need to decide if you're okay with that, then okay, then you need to really have a long-term perspective. And you might even want to make sure you have some dry powder such that when you do get opportunities like this, you actually have some money that you can put back into it so you can buy the dip. If you're all in at the top and something like this happens, yeah, I mean, your account's going to get knocked around and then you have nothing to do when you actually have an opportunity. So I think you need to make sure that you can manage your account properly. And you could also split it. Maybe you get stopped out of half your position and you let the other half ride. So then when you do get a low like this, you can add back that original portion. So you need to buy yourself opportunities because that's the whole thing about the market is you don't really know what's going to be happening next. And a big surprise like this on the downside, eventually I think it's probably going to be a buying opportunity and you need to make sure you can capitalize on it.
Well, especially when you're in essentially a leverage play on Bitcoin too, which MicroStrategies definitely has been that when you get a correction, holy, look at that chart. It
Yeah,
just goes
and
down.
that's the thing about the leverage. I have heard some things, and I can't prove this at all. I don't know for sure, but there are some funds out there that own Bitcoin, and they don't want to get rid of their Bitcoin, so they need to hedge their portfolio when things like this start to happen. And my understanding is that the easiest way, because of the amount of premium or that they had options and liquidity, is that then they were shorting MSTR to hedge their Bitcoin. So that might be another reason why some of these things went down so hard and so fast because just the mechanisms behind this had a lot of people exacerbating the situation. And then you can even think about this like, we have a lot of computers and algorithms that now trade the market. And some of these things, they can just snowball because, I mean, you see how fast things can move to the upside. Well, you see how fast they move to the downside. And, we kind of might be in this new world over the last 25 years to where these computer trading programs really push things very fast to both the upside and the downside.
TG, just back to that overall crypto space too, because you follow so many different companies, one thing we've been seeing is that the smaller companies have not done well. The smaller coins have not done well outside of some major blips, but Bitcoin's done so well and Ethereum has done okay. Do you notice at all? Do you have a sector gauge on stuff that if the smaller guys, if the more speculative plays aren't doing anything, or quite frankly are going in the opposite direction as something big like Bitcoin, that either gives you worry or gives you comfort in taking some positions?
No, from what I look at, only because these things are now showing up in ETFs, and so I can actually look at them through Thinkorswim as opposed to having some other platform. I basically watch Solana and Ethereum and Bitcoin, and now actually I can watch XRP because they have ETFs or leverage ETFs of that, so I can at least see what's going on. And just in my brief few months of being able to see these ETFs and track these things, they pretty much all move together. I mean, they might move faster or in their own little way, but they're all going to go up at the same time, all going to come down at the same time. So I don't really see too much difference there. Basically, if Bitcoin or crypto are doing well, then great, the market's probably doing better and all that kind of stuff. And that's why I'm kind of tying these together, saying, look, MSTR and Bitcoin, Ethereum have really just fallen off a cliff. I think they're starting to get into probably attractive areas to where buyers are going to start coming in. So I do think that this should help indicate that maybe the market can kind of start correcting and fixing itself. As far as the SPX, we're at the weekly 21. I can't for sure say yet where we're going from there, if we're going to bounce and go lower, or if this is actually it and we're going to repair and go higher. But looking at the crypto, I'm like, wow, that's a huge move down. And I actually don't know how much further we're going to go down. But I at least think we're going to have a bounce and we'll have to kind of see where it goes from there.
Well, TG, just to the point you made about MicroStrategy and how people may be hedging their Bitcoin position with options using this as an equity, I actually just listened to a big 1 hour interview with Michael Saylor last week and was just curious what was going on with the company. And he mentioned that out of all of the publicly traded companies, I think they're in the top 10 most amount of options trading and the largest options market of any other equity. And it's for the exact reason you just mentioned, that a lot of people may trade with a cold storage wallet or in a Bitcoin exchange, the cryptos themselves, but they treat an equity that's holding like a Bitcoin repository like MicroStrategy differently, and that they can use options trading. And I want to maybe open this up to a bigger theme with you. This year has been a theme of people, especially hot money, using options in effective ways or sometimes not effective ways. And even 0 day options have become a big theme, which I know you cover on your site. And one of your best trades of the year was on an options trade on a leveraged ETF. So maybe talk about how that factors into some of these outsized moves in the markets.
Well, that's kind of it. I mean, we're seeing that all sorts of different products are being created. We have leverage on top of leverage. We have options on top of levered ETFs. We have zero DTE. And we've been seeing just how much volume has been in zero DTE over the last couple of years and how that actually affects the market. And because we have these things called gamma, like GEXPOT and spot gamma. And when the market opens, you can see where most of the volume is for a zero DTE option on the SPX. And a lot of times, that actually drives where price is going to go. And so it's these derivatives that might actually be having a large effect on the market. And so going back to your MSTR thing, my understanding also is that there are a lot of companies or institutions that can't actually buy Bitcoin or Ethereum directly, but they still want to have exposure. So they have to buy a stock. And so what they've been doing, like Michael Saylor and Tom Lee, they've been doing these DATs, digital asset treasuries. And so basically you're buying a company, which then is buying all these cryptos, whether it's Bitcoin or Ethereum, and then that is how these institutions can get exposure. So that's why they have all the options. That's why they have so much liquidity. That's why they have all this, because those big companies need to be able to have all those things, and because they can't get directly into the coins themselves. And so I think that's why you're also seeing BMNR start to, wave its flag and say, hey, we're also a huge volume player and we have a lot of options and premium. And, hey, it could really exacerbate things, but that's kind of where we're at. That's how these things work. And that's where people are really starting to play around a lot.
So, TG, taking a step back, you're always very good at finding other sectors, other areas that are showing life in these markets. Where are you seeing some of the best opportunities right now?
Well, amazingly, the biotech space, LABU and XBI, they've been on an absolute tear and they're actually continuing to break out today. Now, I have cautioned they've been on a tear for a while. They are pretty extended, and I've just been saying that if you've been trading these, it's a little hard to chase them. And I think you need to be prepared that there could be some big pullbacks because when you get super extended, the risk to reward is not in your favor on the long side, and you could start seeing some pullbacks. So, that's been going, but I can't really recommend it too easily. If anything, I'm kind of looking for these giant pullbacks that we've had to become opportunities, but I don't necessarily need to be the first one in, so I'm still kind of laying low on them. And then what I'm trying to do is actually find stocks that have held up pretty well during this market pullback. That's always the thing. You want to look for relative strength. And so you can either play the dips, these pullbacks that the market's been doing, or you look for relative strength. And something like Upwork, was it UPWK, has been holding up very, very well compared to what the market's been doing. And so you just look around for things like that and say, well, hey, if it didn't go down over the last few weeks, then it's got to be pretty good. And so, that's where you want to go trade some stuff.
Well, TG, when you look at a stock where I guess it's an ETF like LABU in the US, that's a three times leveraged on the biotech space. How do you play those leveraged ETFs as far as the decay factor? Are they short-term trades? Do you see them as just the same as any other equity, or any nuances around using these leveraged ETFs?
Well, you do have to say that they need to be short-term trades, and of course you need to define that because you just need to make sure that people aren't buying these things because they think they're going to hang on to it for 2 or 3 or 4 years. But short-term can still mean several months. I mean, you look at LabU, and if you were in this thing since June, you've been having a great time, and you don't care about the decay because this thing is triple leverage and it's been doing wonderfully. And the same thing with Tesla or TSLL or SOXL for the semiconductor space. I'm happy to trade these things and own them for weeks and months at a time. The thing about the levered ETFs with the decay is that because they're bullish oriented, they have the bullish ones and they have the bearish ones. Let's assume we're looking at a bullish one. The bullish one will do great on the way up. But if the market or the ETF or the sector or the stock starts to come down hard, the levered bullish ETF can actually go down further in proportion than the true underlying. So if you look at Tesla back, I don't know, when the tariff tantrum was happening, TSLL actually went under previous levels where Tesla actually went equal to those previous levels. And so that's where you just need to make sure that you don't really ride the leverage ETFs too far down because they go down further and then you have to kind of claw your way back up on the upside. So kind of ratchet them in, you can keep them for a little bit as they move around, but you got to make sure that you really just kind of keep these things on the way up.
Okay, I want to follow up on one thing you were saying there about really, essentially, the way I understood it, not trying to pick a bottom when you're going through a correction. Even though you see these corrections or whatever correction it might be as a potential buying opportunity here, you're not trying to pick the bottom. It sounds like you're waiting for a bit of a turn. So, what does that look like? Because we constantly hear of people trying to pick the bottom, and sometimes it can just keep drifting on them.
All right. Well, I'll give you guys a couple things that I teach all the time that people pay for inside of my subscription, and these are the lessons that I teach. And while it's kind of fun and exciting to try and buy the dip or feel like you're buying the low, unless price is actually turned around and changed direction on lower time frames, you could be trying to catch a falling knife because you don't know if the dip is going to keep dipping. And so what I do is I call this a first move versus a second move. The first move is just when price happens to bounce from a low area. The second move is actually when price gets over certain moving averages, like say the 50 SMA on certain time frames, say either the daily or the hourly, and actually starts to hold that moving average in a upward direction. That is the change of trend. And that's what I use in order to help establish or show me that price is now actually starting to trend higher on this particular time frame. So I don't have to just guess where I'm buying the low. I don't have to keep dollar cost averaging on the way down. I don't do that. I actually wait until things turn and then I can decisively point and say that is where it's turning, it's going up, it's trending higher on that time frame, and I will go with it until it fails. And if it fails, then I'm out. Maybe it was just a big bounce in a downtrend, but it was still just a bounce. And those are the simple, I know they're kind of simple but hard to implement. And that's what I do. You just actually have to wait for price to turn around. You don't have to keep buying on the way down. You don't have to keep, buying the dip because dip can keep dipping.
Yeah, I completely agree, TG. But hey, I know there are many people out there that like to try to pick the bottom or they have no problem buying as something is heading down. To me, it just seems like you might as well wait for some sort of a bounce and maybe give up that initial
Well,
few
you know,
percent.
Corey, for me, when I was saying like I don't need to be the first one in, like, what's it matter if you're the one that actually got the bottom tick? You know, it doesn't matter. You don't need to be the first one in. You don't need to catch the absolute low. How about you give it a little bit of time? Because a lot of times these things don't just come down and then suddenly reverse hard and you'll never find another entry. They go down, they turn around, they come up, and then they usually pull back or flag into support and then go higher. There's almost always a good clean spot that you can look at and definitively say, that's where I think it's going to go higher from. You just don't need to keep guessing on buying the dips.
Yeah, no, I'm totally with you on that one. But hey, different strokes for different folks. That's what makes a market. I do appreciate your strategy, though, TG. Really find it interesting and very helpful for how much we've been talking over the years now. If you want to follow along with TG, learn more about his trading strategies, click that link in the show notes to visit that Profit Pilot website. TG, thank you very much for your time. Have a great weekend and a very happy Thanksgiving.